it seems to be a better idea to focus on a couple different strategies and just review them, and then we can go from there. So we're going to start, and let me click this off. So what I want to do is I want to review 4 different trades that you could have done with the systems that we went over. Okay. I'm going to just use some large cap names here, and then we're going to drill into this. So here's the SPY. Now, everything is up here. I'm working on it with TradingView, and maybe I'll get done today. Maybe it won't, where I'm going to make this like one click. All this stuff is just going to appear in an indicator. So I'm figuring out how to do that right now, how to create something like this to just make it all one indicator. So all you have to do is simply click on this and it'll just load as one indicator. I think that's a great idea for people, so they're not sitting there trying to configure this stuff. But nonetheless, everything you need is right here. Okay. And we have VWAP turned off because we're just going to look for entries. So if you have an hourly chart and we are above, okay, we are above the, right, you're above your cloud, your blue, right, which is your long cloud. You're above your middle cloud. Okay. You can see that right there. And then you flip, okay, your EMA, right? This is exactly what you want to see, right? So if you're above your EMA, you're above your clouds, it's risk on. So the moment that that happens is right here. Okay. So the moment that that happens is here. Now, on this date, okay, you never undertook that low on the hourly. So it's still going on. Now, let's say that you don't execute there for some reason, and you're executing on this day. All right. So I'm above the cloud. I'm above the other cloud, and I'm above, right, the EMA line. Okay. Now, if I'm above the EMA and I'm above everything, they're my signals. Once I have my signals, I very simply drill down into the 10-minute. Now, if we look at this, you're going to have a completely different outlook. But see these arrows? Okay, this is one of the reasons why I like this system a little bit better. So if I'm waiting to make sure that I'm above all of this, well, I'm above it all right here. Okay. Now, whether or not you execute here or don't execute here and pull out some money, we don't know yet. But once you're here and you're above, okay, even if you miss that and then you go here and you're above, right, there's entries here. And this is all stemming, right, from a 10-minute, and a 10-minute is 6 candles of an hourly, right? Same thing here. We were above on the hourly on the gap up off the open. We pulled back, okay? And then we went. Now, you never touched the 10 again, so it was really hard to do that for a pullback strategy here. But it did give you an opportunity to go long right here, okay? And all you're doing with this is a perfect opportunity, right? And all you're doing with these is after you find these opportunities from the hourly and boil down to the 10, you're going to the 5. Well, once you're in the 5, all we're doing is making sure that we are above the SMA. Are we above the SMA? Yes, we are. Okay. Risk on, that's your stop, right? You never broke your stop. Never broke. So based upon that, you would have drilled into a 2-minute, right? Now, if you look at the 2-minute, the moment that you flip that level, you were in. Up, right? Comes back down. Whether you're in or not, we don't know yet. But never broke. Rallies, right? Now, whether you're selling into these 5-minute rallies or not is not material. What's material is you're testing these levels, and you can either use these pullbacks to get in or not, or find other locations, right? But the bottom line is they're working, they're executing. So then you just drill into this on a 5-minute, and this is how I would look at making the decision when to, get in or out of some of these names. So if I don't have another game plan, and let's say that I bought that, now I would just simply get rid of these because they're no longer material, right? So let's just so we're clear about that. I'm really only wanting to be in these for entries, right? Maybe I could be clear about that the first time around. I'm really only using these for entries, not for exits. I don't really want to be below these clouds, but I'm not going to exit because it happens. But I will on something like this. So now here you are, right? And now VWAP, understand that you have standard deviations on both sides of VWAP. Now, based upon that, right, and the standard deviations on where you're at, when you're out of those, you might want to start selling, right? Because you're only looking for a day trade. Okay. So when you're out of these standard deviations, you might just want to start reducing your exposure just solely based upon that. Right. But the other thing that you're going to find here is that once you're flipping these levels, as long as you're using that level, you're staying in the trade. Right. And whether or not it's holding or not holding is going to be up, it's going to be up to you to make that decision. But I like it a lot, and I think it's very clean, and I think it's very, very easy to do. So it's definitely something that I would suggest that you focus on, and you concentrate on. So I don't know how else to I don't really know how else I would structure that, but this makes a lot of sense to me, and this is a very simple way to trade. Now, I want to just review this one more time, and then I can go through two names, and we can review those as well, and then I'll take your questions if I have questions. So let's close this, and let's put this in, and let's go out to the hourly. So in the room, I'm going to start telling you when we're at a potential bounce area based upon this system, okay? So we're really going to hammer this system home. And one of the reasons is there's two systems I went over, and we're going to go over the other one again today, that really work, in my opinion, and you can back test all this stuff. You don't have to take my word when I say this. You can literally go get back testing equipment and back test to see the probability of what we're going over and whether or not it actually works. So here we are. Here's the NASDAQ. And you can see very clear, we had an uptrend here. That uptrend broke. We broke our moving average, tried to rally over it, couldn't. All of a sudden, support starts becoming what? Resistance. Breaks down. Can't rally, tries to rally, can't, falls straight down, right? Tries, fails, right? So you could have tried here and it would have failed, right? So we could have tried this and it just didn't work, okay? It's very possible. Next, you're down, you're below everything, and then you flip. Okay, right in here, when you flip, there's your buy. I'm now above the cloud, right? The short-term cloud, the long-term cloud, and I'm right above my EMA, 20 EMA. Now, you can see how that worked out. It worked out very well for us. That's why I put in the room the other day that we were in a bounce spot. Now, you can use this, and then you could have simply done the same exact thing where you're drilling into these over much shorter time frames. I'm not going to review the 10 again. We can if need be, but you want to start jumping into the 5 and start looking at what's going on and going, okay, well, here's my move. Okay, well, there's my move. I came back down, I tested, and then I went. All right, well, here it is too. I went, okay, well, I never broke, so I'd still be in this. Then you drill into that 2-minute during the same time period, because that's where you're going to execute on. And then you look for the same time. Now, here's that time period. So all you would have done on this trade to buy those cues based upon that bounce spot was say, I need one green bar above, right? Because it's that 1500 time that we were looking at. I need one green bar above to go. I need one green bar above my 20 EMA to go. And then it's trade on. Okay, well, that's right there. it never looked back. Okay. So I just want to be really clear about this. And we are using this mostly for day trading, but I just want to point something out so that people do get this, right? Could you use this for a longer term? You could, a couple days. But see this level right here? Like right in here is your stop essentially from this, right? You're going to use the low of this because if you break that, you're busted, right? Okay. So now you trade up, trade pulls back, trades up, right? Pulls back. Even if you did something as simplistic as I'm just going to use these lower lows, right? And you're saying I want to stay in longer. Okay. I like the idea. I think it's going to go, whatever your thought process is, right? And I'm doing this from a day trading perspective, but if you're using these lows that I'm pointing out that are here, okay, and you're using like these, when you don't have lows, if you're using the lows of those dojis as stops all the way up, okay, and you're just using those little wonky ones, right, then the moment that you break that, which is right here, right, which I'm pointing out for a reason, I think you'll find this interesting, okay, so here we are, right? So you're buying at this level, 281. You got to 288.66 before what happened? Before I made a lower low right here, okay? So let's zoom in on that so you get it. Because this is something I really want people to understand. Pull this back and pull this over so we can really zoom into that. Okay, good. So when does this happen? Well, this happens, right, during a day break, right? See the break? So if you didn't take this, right, when it broke, okay, then you're dealing with this the next day, okay, which is still a huge move. But the point that I'm getting at is this. When you broke and when you rolled up here, okay, you run into an issue. When you broke up here, rather, you run into an issue. It's not this far back. It's back here. I lost my spot there for a moment. When you broke right here, right, that was it. Okay. And then you dropped for some reason. I thought we were here. We weren't. We would have been here. So that gives you a really clear demarcation line on how far some of these moves can go. Now, if someone told you that something as simplistic as this little thing was going to catch, I don't know, 8 points, right? Just something as simple as that, right? Because that's what it would have caught to that level. Just doing higher lows on a 2-minute chart, right? Repeatedly. That's all you did there, okay? You caught 3%, 2.5%, 2.6% on the NASDAQ off a 2-minute chart, all by drilling down off of this. Now, the reason I'm pointing this stuff out is I'm not talking about macro. I'm not talking about fundamentals. All I'm talking about, you can see all your marks here. All I'm talking about, okay, is this particular time and what transpired. That's all we're talking about, right? And you can see how we reacted to it. And that's the point that I'm getting at. Once you flip, that was it. And then it was trade on, okay? So keep that in mind. Now, let me see if there's questions before I continue. Good morning, Emily. So, but I will going to do that, Emily. I'm going to put that on there so that everybody can put these together. Now, again, I'm going to keep these a little shorter. We're going to shoot for 45 minutes. And we're going to repeat a lot of the same things over and over again until people get them. And then we're going to have some kind of level of proficiency so that I can see that people are getting it. And I'm not really sure how we're going to do that yet, but I think we're going over too many ideas and not enough detail. So you can see these trades. Now, let's just take a look at leading names. Let's take a look at Apple. Let's look at Apple on the hourly, okay? Because it really doesn't matter what Apple does. It really doesn't, right? So it's just not really relevant, nor is this volume. So let's get rid of the volume just so we can even have a cleaner chart. Now, all we're going to do is look for SPY spots. That's all we're going to do, okay? So if we were going to drill into this to find a buy spot, then we would just go, okay, well, I need to be above the cloud. I need to be above both clouds. I need to be above the 20 EMA, right? All we're doing is looking at longs right now. So here we are, we're above. Okay, well, we came back down, we're testing in here. All right, right? So, but we're not above here, and then we get above it, but we never make the higher high. Okay, we get above it. We never really make the higher high. We get above it right here, and then we make a higher high. Okay, so now you have my attention right here, right? All right, so there, now you have my attention. Why? Okay, I made a higher high after flipping it. So now you have my attention. All right, so now you drill into it. Let's go back to this. Well, I don't need to because I put the arrow there, right? Okay, so now there's the arrow. So now what I do is drill into this. I really like how I'm able to mark things on this charting system with arrows. I think it helps greatly with education. So here's my flip, and then I push. Okay. Now I take that 10. I see I'm above my cloud, and I'm above the 20 EMA, and the smaller cloud I don't care about so much. Then I just drill into the 5. Right. So all you're going to do is drill into the 5. Okay. And when you do, you come across this level and you find a little spot and go, well, that worked out perfectly. All right. And then you would take that and drill into the 2. And you can see the execution right here, flipping that level. And then it's on. It's right here. And then this is your stop right here. Okay. All from that hourly chart. And that all stemmed from that hourly chart. Okay. So it's really important to understand that's how fast these things can move, and then how quickly and how much you can pinpoint your actual entry by drilling down from hourly, 10-minute, 5-minute, 2-minute. By doing that, you can really hone your process and find your bottom. Your bottom on these trades should always be something like this, right? It doesn't matter where it is. I'll just point them out because we're only talking about bottoms for keepsakes, right? We're not talking about actually there, but things like that. Okay. They're your bottoms. Like that's where your stop should be placed on things like this so that you know that if it rolls, it's broken, right? So like if you bought this for some reason, okay, it's broken. So if it gets up and it breaks, then that's it. Okay. It didn't work. Get out. You can always go look for the reset up, but you get it. All right. Now, one more. Now, here's Tesla. Let's go take a look at Tesla on the hourly. Okay. So this is where Tesla flips, right? Tuesday, right? 2030. This is where we flip. Coming in the next day, this is where you start breaking down. Okay. So that's one spot where you could be looking at shorting it. Well, here you are hitting Tesla right on that level, but you're not above the cloud. So you really can't start executing on this until you're here. Now, the reason I'm pointing this out is these are not optimal. So in other words, you're buying here and you're kind of out of position, right? Because you're not near this moving average. You're off everything and you're just getting through this cloud. And you can always pull back to this level to retest. So and the trend could still be intact, right? So you want to look at these and you want to look at positioning. And I thought this was a really good example of one that you would say, hey, maybe that didn't make the most sense that week. Okay. You take a look at something at like a NVIDIA and see if NVIDIA offered any kind of opportunity. And you can see that it offered an opportunity right here, right? Breaks down, breaks down, breaks down. Okay. Flips right here, right? And what happens after it flips? Right? Pushes, and that's it. And it's gone. So you had an opportunity right here on that pullback. And let's just, let's put the arrow in. I forget I have this tool. So the arrow is going to be on that right there. Okay. And then we're going to drill into that and go, okay, well, this is the 10. And on the 10, we want to make sure that we are above the cloud and the moving average. And we are, right? And that's all in here. Okay. Then we would drill into that on the 5. And say, okay, are we above the moving average? We are. Okay. And then we would drill into the 2. It doesn't matter of anything except that we are above that moving average. So that's going to get you in right about here. Now, it is possible that this wouldn't have triggered yet, okay, because it looks like I'm behind like a minute or two there. So this touch and then this go could also have been used, okay? So maybe you're not getting this, right? Maybe you're not getting that move, that 54.5. Maybe you're getting it up here at 55.75. It doesn't really matter, right? It doesn't really matter because at the end of the day, whether you're day trading or not, let's say you're just day trading it, right? It just keeps going, finally takes out that lower low, like right here, takes out that wick, you're out, trade's over. If you're trying to stay in for a longer time frame, you're going to be using longer, right, stops, right, like this. I mean, that's pretty clear where your stop is there, right? The low of that whole bar area, there's your stop, right? Then your stops to start moving up to here. I mean, there's no way that that's not a stop. Maybe you didn't wait for it to close and you stayed in there, or maybe it got you. And if it got you, it got you. It doesn't really matter, right? Because you still made money, right? And then just keeps walking you up, okay? So let's take some questions. Do you feel better? It is better to use an hour than instead of, I think it depends on the system and the process that you're doing. So what we're trying to do, Charles, is we're trying to drill into the first sign of a trigger, okay? Give me 1 second, I'll explain this. Okay, so just like we did on the swing trades, okay? Just like we did on the swing trades. All right, on the dailies, there's a signal that comes, right? And we want that signal, right? But here's the thing about it, and this is really what I'm trying to hammer home here. Now, take something like the NASDAQ. All right, here's the NASDAQ, right? Okay. We can all see that. The trade that works the best is the first flip that is successful. What do I mean by that? The trade that works the best, okay, is not the retest of these systems, okay? They're not the best ones. The best ones are when you have a change and then you look for a pullback, okay? So let me give you an example. This hourly signifies a change. You're above everything. You haven't been above everything, right? Since when? Back here. Okay. You haven't been above everything since back here. And it wasn't really coordinated until here, right? So coming down, testing, like you could have shorted there, right? If you wanted, you could have tried. You can't really go long there because you're below the cloud. So you don't have a setup. You don't have a real setup. Your first real setup, right, on the long side is here. Your first real setup on the short side is right here, below the cloud, below the cloud, below the cloud, below everything. And then you could just see how that worked, right? So there's definitely something to this, but it's the first change. It's the first time that it changes that it becomes significant, okay? And that's really what I want you to understand. It's the first time that we have the change that it becomes significant. And this is the first time you have that change. Now, what does that mean? Well, it means a couple things. Okay. Now you drill into, let's do it here and do the 10 this way. So now what you would do, and let's get rid of my 1,000 lines, is you have a signal, right? You have a signal. Now what you want to do with that signal is you want to dial it in, right? That's all you're doing. Think about it like almost like a radio, right? Where you turn, well, maybe I'm dating myself because kids today don't use a radio, but you turn the dial. 93 is not going to get you there, but 93.3 is, right? So you start dialing into it, okay, and drilling into it and trying to find the right entry, okay? And that's when you start dropping in your time frames over and over again. and you're executing off a 2-minute, right? And the purpose of executing off the 2-minute is so that you can find out where you can put the biggest trade on with the least amount of risk. The biggest trade on with the least amount of risk, right? That's what you're trying to do. If I was to execute off of this, right? If I was to execute off of this, right? Then look where I'm at. Okay, I'm not executing till I'm up here. So let's get rid of this for a moment so you can see this. Okay. I'm not executing until I make that higher high, right? Maybe I'm executing on it, whatever. Let's just say I executed the higher high, 283. Well, now I have $1.50 stop. Like, do I really want that? Well, maybe I do, right? It's actually lower. It's actually down here. I wish they would pin those on this better. So maybe I do want that, right? But my point being is, okay, it's about $2. Do I really want $2 if I'm buying options or I'm buying the TQQ? Probably not, right? But by drilling, this gives you your signal. This flip gives you your signal. Just like the other system we're going to go over again in a moment, gives you your signal. Doesn't mean that that's where you buy. It just means that there's a signal, okay? That doesn't mean you enter. It just means you have a signal. That's all. And then you drill into the 10, the 5, and the 2 in order to whittle that signal down. I hope that helps, Charles. Let me know if it doesn't. So this is more questions, information, and we'll go from there. So confirm on the hourly first. Yeah. Yes. So confirm on the hourly first, but the moment the hourly criteria are met on a trade, we can drill down to the 5, yes, the 2, and confirm. No, don't wait for the confirmation on the 100. I mean, you can, but you don't know where that's going to be, right? Especially if you're using this to day trade. You have no idea where that's going to be. So this one you got lucky on because you have a doji, but you don't know what you're going to get, right? So for example, let's say I was taking this short, right? And then I'm waiting for this bar to confirm that it's going to break, right? Well, now I've got all kinds of stuff. Right now I'm down here. Maybe I'm in here. Maybe it does this and it takes me out. You want to do it as soon as you have that move, that confirm that you're over it. You want it to be over it and confirm that it's over it. Okay. You don't want to, I'm just going to be really clear about this when I'm saying, I really don't think I want to do this bar, right? That's where my head is. I want to be over. And then if that doesn't work, it doesn't work. Just like it didn't work here. Okay. I pop over like I'm going to go, and then I flip, and then I fail. All right. And now you're here. And then the next day, it looks like, well, not the next day. Yeah, it's over the weekend, I gap down. So I'm not so sure you were hanging in here anyway. But you can see the move. Once you're over, you probably are buying this, and then you just have to get out of the way or stay in it, and then you're getting stopped out on Monday. But this flip tells you everything. So that's what you're looking for, right? I don't need, once I have that flip and I'm over, I don't want to wait for this, right? Or wait for this to make that higher high close, because there goes an hour, especially if we're day trading. Do you have any idea how we can get a complex alert that would alert us? I'm working on it. So Emily's question, do you know how to make an alert where it shows all three? I would like to do something like that where it can just tell you automatically, like buy, sell, buy. There's a way to do it, Emily. I have to input a lot of other data. I saw somebody do it with DeMark indicators. So I know that I can do it. I just have to spend the time on it. But there's definitely a way to put, so like confirmed, right? There's ways to do it. There's definitely ways to do that. And I have to figure out, where they are confirmed, right? Like you can see them. And when you see those, they obviously are going to have a higher degree of probability confirmed on the breakdown, right? I mean, it'll be so obvious. right? I mean, you can just see them confirmed, right? I mean, it's told you the day before it was going to go gap up, and you can just see them everywhere. So I do. I think it's important. I think it's very important. I'd like to see if I can do that. So let's see what else we have. Hey, Knight. You can wait for the first initial hourly candle to close. I would wait for the first initial hourly candle to close, unless you're in like a mad market, unless it's like running for some reason. I'd want to see that close. I would want to see an hourly close because you're going to get too many signals. So let me give you an example, right? You're going to get way too many signals, but let's say you're doing down here, right? And you get this bar and you pop over and you're like, oh, I'm in, right? Now you have this wick and you're like, what did I buy? Now I'm in, now I'm down, right? Now I'm here, now I'm under. Oh, maybe I'll hold it. And then it works. Well, now you think that you're supposed to do that, right? So that's going to be an issue. I do think you wait for the confirm, but what that confirm could do is it could give you something like this. And this is why I'm using this area. And that's where the rub comes in. Like, is there some reason this exploded like that day that I need to be aware of? Is this, a date was data release is going to be a data release. And so I'm going to get a bar like this. That I don't know. But if you're buying this bar, right? And then you're saying, I'm not going to execute until I'm at this bar, right? And you never get over that bar. Let's just say for the sake of argument that you did get over this bar and you did trigger and then it did pull back down. It's just not where you want to be. So I would prefer to have the hourly confirmation over. We're not always going to get what we would prefer, right? So here you're touching and you closed and then you're getting in right around the same area. You're actually down, flips the high and it's on, right? So that you're getting. Okay. So some of them you're going to get, some of them you're not going to get. But I think that you're better off waiting for the confirmation. You'll have a higher degree of winning if you wait for the confirmation. So you have a higher degree if you wait for the confirmation. I don't know if I'm going to go over the other one or not. You can turn the magnet on to pin levels to more accurately. Oh, thanks, Cam. Let's try that now. I'm not even sure I'm going to go over the other system, just not to confuse people because of the time. I'm going to touch base on it though, because I want to just point something out. I went over it in a coaching call today and it made me think about it even more, but let me just try and see if that does. So we turn on this magnet. Is that the magnet? Magnet mode drawing anchors will be snapped to the closest. Okay, got it. Really? Oh, that makes life easier, doesn't it? Oh, but that does. Huh. It actually pulls it towards it. Yeah, that's a really nice function. Thanks, Cam. All right, so I do want to go through this other one before we go here. Yes, you're dialing it in. So I want to go through that. I'm going to start pointing those out again next week. Now, I want to go through another system that we used, and I'm probably going to do this again even next week and just review it again. I have to think about how to do this, and maybe I'll have like live examples of the actual trades. But it's really important that people get these before I go on to like a new topic. So let's review this. And this is one that we've been doing, or you should be doing, or at least watching if you're looking to day trade. So I'm not going to bore everybody again with the 130, the 78, and the 208. Okay. We know what they are, right? We're fully aware of them. It's a 15-minute chart. Now, I don't care if you're swing trading or you're day trading, but I could care less. You have to do what works for you. Okay. Points of convergence, like you just talked about, Emily, are extremely important with these, right? You can see them. If you have everybody that's buying the 3, 5, and the 8, and they're all buying at one spot, and that's where you pull to, you're going to want to pay attention to that. If you have everybody here that's buying at the 3, 5, and the 8, you're going to want to pay attention to that. Okay. So you're going to want to see this stuff, right? You're going to want to see that. So I want people to know that, like, once you're above these levels, you can use these support as supports and then try to re-enter these trades. So you can use all three of these lines, right? All three of them can be used. You don't have to just use one. But for the sake of argument and just pointing this out, I'm going to get rid of the 8 and the 3. And I just want to focus on this for a moment, just to make this simple. So let's say I'm a day trader, and that's all I am. I'm a day trader, and all I want to do is day trade. Okay. And I only want to day trade certain names. So let's take Apple. Right. I'm going to day trade only on the long side and only when I am near the 5-day. So what I would do is I would take that and I would take a chart. Now, for our purposes, a 1 minute's not going to work here. You're going to have to do a 2. I would suggest you do a 1 minute off of what I'm about to show you, but you can use a 2 as well. Use what you're comfortable with. So we know we have a signal right here on November 22nd at 1 o'clock. That's when we flip over and close over the 5-day. So you know you have a signal there, right? We can all see that. Okay. So then we would go to November 22nd. Let me see if they'll let me go back that far. They will. Perfect. And we're going to drill into that time frame exactly, which I believe was wasn't that it? 1 o'clock. Okay. So then we're going to go here to 1 o'clock. And we're going to see this level right here. Now, I only have VWAP in. So I'm not going to throw a lot out there. Okay. I only have VWAP in. Here you are at 103. So what are we waiting for here? So I have my executed bar, right? I have my executed signal right here, no different than what we had before, right here. You might have even entered on here. You might have entered here, right? We don't know. But if you're entering here, right, on that close over, and that's why I would wait for the close. I'd always wait for the close over before I'd start thinking about doing these. But if you're looking at that close and you're entering here, right, then this becomes really simple. Okay. This is your stop. All right. And now you're looking at this pattern and all you're saying is, I just have to get above this pattern. Well, to get above that pattern, right, I have to get above that bar. You could even say it's above this. So now I'm in Apple on my day trade for 34 cents. Okay. I'm in there for 34 cents because I waited for this line to hit. And when it hit, I got in. All right. Now, whether or not you're staying with this the whole time because you want to stay in for a swing trade, that's up to you. But you can do this over and over again where you're buying in here. You could be blowing it out on the way up here and getting out of it, right? And making your 50 cents or 75 cents and going on to the next trade. That's completely, utterly up to you. Okay. And you can see these levels really clearly right here, right? So then you have another one. Well, where's the other one? Well, this would have been the other one. Okay. And what date was that? That was the 23rd at 9:30 in the morning. So let's go take a look at that again. Okay. And let's go. Well, what happened on the 23rd at 9 o'clock in the morning? Well, here we are. Okay. In the 2 minute, right? Flipping again, I would do this with a 1 minute, but we can't on this particular charting software. And then you flip right here. So now I've made a higher high orb. There's my low. That's it. Trades on. Okay. If you were using this, you would have caught this entire move or a portion of this move, whatever you would have done with it. Right. So in this period of time, just knowing where you were in regards to Apple to the 5-day, seeing it stop and bounce there, getting a little particular pattern, and then trading it up and then seeing where it went would have worked out perfectly, right? So on something like this, in a very short period of time, you would have made $2 in like 20 minutes on that name. So go through it again. Okay, we crack it to the downside. So you're doing these retests, right? So then you hear again on the 23rd at 1:15. Okay, you ran all the way up, you came all the way back. 1:15, you pulled all the way back to that level on the 23rd, right? 1:15, 1 o'clock. 1 o'clock, you get that doji. That doji is perfect, right? We know patterns. We flip the doji, okay? And once we flip that doji, which is where? Well, that's a coincidence, right? That fits perfectly here to here. So once we test and then we flip right here. Now, once you flip, I want to know where VWAP is, but I'm not doing a trade because of VWAP, just so we're clear on that. It's not a contingent. I'd rather be above it, but it's not a contingent. I just want to know where it is. And let's say that we're going to use that low. Okay, right here. All right. Well, let's get rid of this one. Okay. I'm going to use that low. So now I'm in this for 30 cents, right? News hits. It was that, remember that volatile news. I don't know if you would have made it through this or not. Maybe you did, maybe you didn't. But that got you another $1.50 on the trade. Same exact day that this pulled $1, $2 out of. Okay. So I'm just showing you long trades. I'm not even showing the short side. And all I'm showing you is by using a 5-day. I don't care about the slope. We're not talking about the slope. Okay. I'm just talking about this for quick execution. You take a 15 and then you execute off a 1 or a 2 minute and you quantify your trade. Okay. If you do this and you back test this, you'll be very surprised with the results. Does it always work? Absolutely not. Will you jump the gun sometimes? Absolutely. Okay. But if you do this and you wait for the confirm signals, and there are confirm signals that work, that make sense, then you give it a try, right? Now, if this green bar bounced off here and was all the way up here, now you have a completely different trade, right? You might have had to try it earlier. Okay. So no, if you hit a gap on either one of these, if you hit a gap up, you should be using those as demarcation lines. Okay. You need to use those as demarcation lines because they might work and they might not. Right. And what do I mean by demarcation lines? I mean, we don't know what's going to happen. Right. So in other words, let me just be clear about this. So you get this. All right. So here we are in the 15-minute on the Qs. And this is a great example. Great question. And you open up, right? And you're above the 5. You're like, I'm above the 5. Are you? Because you open down below it. So, we should revert to the mean. All right. So then we come back down. Okay. Did I make a higher high? No. Did I ever get all over the open? No. So there was no reason to execute on this, right? Now, if you take that day and you drilled all the way back down to here on it, which I don't even think they're going to let me go that far back. It's one of the reasons I'm really starting to like the other system a little bit more. But yeah, I mean, even if you were looking here on a 5-minute, you drilled into this, right? That's clearly, you never would have gone near it, right? You formed a flag, you broke, you formed a flag, you broke, flag. I mean, it's repeated. So you don't really wait as much as you look for some kind of signal. Now, you never got one here. So no, right? In that case, no. All right. But there are times you're going to execute on it like here, and you're going to walk in the next day in this. So you're going to have to know where you are in the pecking order as to whether or not you're going to want to do this or not. Okay. And there, of course, there's gap risk. I would confirm before you get in is really where I'm going with this, Emily. All right. So your stop is off of a 1 or a 2-minute chart. That's what I'm showing for day trading. The times that we've reviewed this system, we really didn't talk about it from a day trading standpoint. So where I'm reviewing this now is from a day trading standpoint. All right. So what I want to do is I'm trying to get people to implement very simple strategies that for day trading, that if they implement and they're disciplined over time, they will probably do a little bit better. Now, here's my point. See where you're at right here, right? On this and how you're flipping right in here. Okay. I don't need this to execute and this to be my stop, right? So that's November 22nd at 1 o'clock. I don't know where this 15-minute bar low is, but I know this. Okay. If I go to the 22nd right here at 1 o'clock. And let's get rid of all these lines. All right. And I go to this 1 o'clock, right? 9:52. Let me find that 1:22. Oh, there it is. 1. There we go. Right. So my stop would be here. Right. My stop is going to be under all this support. Okay. Whatever the low of that support is, if it's here, wherever that is, right here. Okay. That's going to be my support level. All right. Right in here. Okay. And then, I mean, you can see this pretty clearly, right? That little right area. All right. So then I trigger at 1, right? Where do we trigger? 1 o'clock. Yep. So I trigger at 1. Okay. But here's the 12:40. And then here you are triggering. It doesn't go for 6 minutes. Okay. Once that triggers, that's it. The low of that becomes my stop. Your entire range now is this. Okay. From here to here. That's your stop. Now, that is very different. I think it's going to be very different than entering here. Okay. At the high, right? Because you're not, and then you're here. Okay. Whoops. I'm sorry. So, okay. Then there. Well, that's the same level. So maybe sometimes it's going to be, sometimes it's not, Emily. But I would do it off of this chart. I would not do it off of this chart. All right. All right, so we went over these strategies again. I would watch this a couple times. If you have other questions, I'm here to answer. I can stay for a little bit longer if you have questions, but I'm going to start trying to keep these down to about like 4 minutes or 45 minutes rather. So I'm just not overwhelming people. The more I look at it, the more I'm throwing out way too much information without people understanding the first portion of it. So let's just we'll get to it and we'll get people to understand. But these work, okay? And you obviously have gap risk, but if you're looking during the day and you're trying to figure out like what you're doing is not working, start looking at something as simplistic as the 2 strategies we went over today. We're going to start looking at them a lot more. And I would strongly recommend that they are ones that you look at. Yes. Yeah, I do them all. I do them, but I will point them out. What I will do, what I'm going to start doing with these is, we want me to do it live? Hold on 1 second. Yeah. I mean, we'd have to wait until we can see one and then I can just do it live. Yeah. So, I mean, I can't leave the recorder on for 8 hours. I mean, maybe I can throw the recorder on, maybe I could throw the recorder on one of my other computers and then trade one of the accounts over there. I don't know. I have to think about it. I don't know that I can do it live with a group and just turn it on, because let me think about that, Emily. If you're asking, can I do it live? The answer is yes. Can I do it live through StreamYard and YouTube? I would have to have the link running the whole time, right? Unless it's off the open. We can look for them off the open. Let's look for them off the open and we'll see if we find them. If not, maybe I could just put a screen share on like one of my computers for like a day or something. I don't know. I'll think about it. The answer to your question is yes. Let me think about the best way to do it. Any other questions? Do you guys like the idea, and girls like the idea of going over these topics more than once? Is this helpful or is it redundant? All right. Nothing? Okay. So any feedback's appreciated because it lets me know which way to go with these. And we will go from there. But if you have questions, I'm around. I'll be looking at charts for a while today. So just reach out. Okay. Well, there we go. So it is helpful. All right, good. I think we have a delay. So I plan on doing it again next week. And what I'm probably going to do is put a book together of trades. I do like Emily's idea of maybe doing these live. I have thought of setting up a live stream for the group, like for those that are very focused on day trading. I have to think about how the best way to do this, right? I don't want to overextend myself. But let's take a look at it. I mean, the goal is obviously, the focus is obviously our community. and we'll go from there. All right. I will be around. If you have any questions, reach out. Have a good day, everybody.